Tech stocks have outperformed the broader market for 2 years running, and RBC Capital Markets analyst Rob Breza says it's going to happen again in 2011. Rob was one of the most accurate stock pickers in 2010, making him a Bloomberg best. And he's with us from Minneapolis this morning with his top software picks for the coming year. Rob, I'm really surprised to see Microsoft at the top of your list. Tell us why you think Microsoft is going to outperform so much.
Sure. I think when we look at Microsoft, it's a 5-year historical trading range. It traded at a peak of 22 times and a low at 8 times. Currently, it's at about 11 times. We think when you get to a price target of $36, which is where our current price target is, it's only trading at about 14 times. We think the consumer hangover starts to lift here. Starting this week with the CES show kicking off this week, you're going to start to see new tablet offerings. You're going to see new mobile offerings. And the company actually was one of the best executing stories in 2010. So from an execution perspective, the company's done a very good job.
So it sounds like what you're saying is the fact that Microsoft doesn't really have a tablet offering, and the Windows 7 phones, or at least the new Windows mobile system phones have just come out, the fact that that's been a problem in 2010 could turn into an advantage in 2011?
Yeah, I think that's definitely going to be the case. I think the consumer hangover starts to lift. The business side of the execution with business demand for their new products, virtualization, their cloud offering, all should really start to help the multiple expand back to that $36 price target.
Let's review some of the other top picks for the year. Oracle, Salesforce.com, and Adobe. What do you like about them?
Well, I think Oracle's strategy here of an integrated systems approach combining hardware and software is very unique and kind of at the forefront of where we think the industry is going. I think when you look at Salesforce.com, really the future of software is software as a service, and they're the clear leader in that space. And when we rank Adobe kind of in that fourth category, we really see their CS5 product cycle peaking this last quarter. As investors look towards the end of the year, with CS6 possibly coming out towards the end of the year, that could maybe move the shares of Adobe in the latter part of the year. But I think in the short term here, I would look mostly at Microsoft, Oracle, and Salesforce first.
And just how much do you think these stocks could go up?
Well, I would say when we look at Microsoft, we see about a 30% upside potential. When we look at Oracle and Salesforce.com, really seeing about at least 20 to 25% upside. And Adobe probably, as we get into the latter part of the year, more in that 10 to 15% category. So overall, software should be a relative outperformer relative to tech.
Rob, how about security? I noticed Symantec's not on your list, even though it's a stock that you cover with all of the emphasis on security, given the WikiLeaks episode and the disclosures of hacking at companies like Google. Is there not a place for security here?
Well, security saw a lot of consolidation in 2010. We saw McAfee, one of the biggest competitors to Symantec, get taken out by Intel. We do expect further consolidation in security software. Specifically, I would say Symantec's probably at the top of the list in terms of an M&A candidate. We'd also look at a smaller cap name called Fortinet. And I do think you'll see further M&A consolidation. Here, most of the bigger companies are flush with cash. They have a tremendous amount on their balance sheets. They have very good access to liquidity in terms of debt offerings. So look for consolidation more in software, and I think security is definitely going to continue on that path.
Now, Rob, as we came in, I said you do expect the tech to outperform the broader market for a third year running. How much of that is a macro call predicated on the economy effectively?
Well, I think it is a somewhat of a macro call. I'd say what we're seeing right now is we expect Europe to start to rebound here in the later Q1, early Q2 timeframe. We also see tech budgets being up about 5%, which is similar to this last year. And I think what you'll see in the North American side is the SMB markets start to recover, and that's going to drive the North American growth. So when we look at overall software, they're historically about 50% exposed overseas. The dollar was very volatile this last year. We do expect that to settle down here in 2011, according to our forecasters. So really look, for a broad economic recovery with Europe starting in kind of late Q1, early Q2, and the SMB market to follow through.
All right, Rob, thanks very much. Good of you to join us here in the Inside Track. That's Rob Breza of RBC Capital Markets. He's a Bloomberg best, and he says Microsoft is his top pick for 2011.